What's up, guys? Welcome back to the channel. Today is all about swing trading. So today is all about swing trading, the benefits of swing trading, what it is, why I like it, but also the downside of swing trading. So if we take a look at this chart, this is a trade that I took recently, and this is a great example of swing trading, but also a bit of the downside. So first of all, what is swing trading? Swing trading means, generally speaking, that you enter on a bit of the higher time frame. So day trading means you enter a position on the lower time frames and you close it within the same day. If you're swing trading, you hold your positions for days and sometimes even weeks. So you really follow the swings, as you will, the swings of the market. And this increases your holding time, but this also gives you a bit more room in terms of price action, in terms of flexibility. And you don't have to be watching your screen all day because you're really following the swings in a certain direction. And that's why I think it fits best with most people, because when you start to learn how to trade, most people, they still have a job and they still have to go to work, and they just don't have the time to be watching the charts all day. And with day trading, you have to be focused for a few hours at least a day to watch the chart. So that's a huge downside of day trading, especially when you're just learning to trade. With swing trading, this can easily be combined with a job. This is how I did it back in the day when I still had a job. I did do some short-term swing trading, as you will, or a bit of day trading. So I had to go to the toilet to check the phone, as I said earlier. But swing trading was eventually what really worked for me because I could combine it with my job. So let's take a look at this chart right now. And I took a long trade in the AUD CAD, and I took the trade here. Quite simple concept. This is a reaccumulation range. We swept the equal lows here. So people that were long and got the stop below the range got stopped out. And this also triggered the head and shoulders. You got a shoulder, head, shoulders. This is the neckline. So a lot of people will be selling here. We break the neckline and then we quickly move up. This is the high of the range, or the high, the head. And as soon as we went above there and we firmly closed above it, I entered my long with a stop at the green line and a target at the upper green line. Now, this might seem like a small risk to reward. If I put my FIB tool over it to measure it, it's about a 1-to-1, a 1 to 1.1 risk to reward ratio. But the odds of winning were 65%. So that's a great edge to play at. But look at what happened after I entered. Look at this range. And during this period, I don't do anything, guys. I wait. And as you can see, I entered here on the 23rd of March. And yesterday we hit target on it's the 5th of April. So I've been in this trade for well over a week, around 12 days before it hit target. And in terms of a handoff approach, this is easily combinable with a job. I just enter, put in my stop and target, and I just wait. And that's it. And this won't work for anyone, for everyone, I mean, because some people are better off managing their trades. But from backtesting, from journaling, I know that if I manage my trades, my performance goes down. So I just enter, stop, target, and that's it. And I sit through this entire period. Now, this brings me a bit to the downside of swing trading, because not everyone can handle this. Not everyone can handle being in a trade for well over a week, price going up and down and up and down and up and down, profit, drawdown, profit, drawdown, profit, drawdown. That's not for everyone. I don't mind, and that's why swing trading fits with me. I am patient as fuck. It's ridiculous how patient I am. And I use it to my advantage to create a handoff approach where I don't have to be sitting behind the screen all day. But if you're someone that can't handle this is not the right approach for you. But I still think you're better off with swing trading, simply because the odds of you making money with day trading are so small. And with swing trading, you're trading the higher time frames. There's less room for impulsive trading. You make less trading costs. You don't need to be as focused. Emotions don't have as much impact on you as with day trading. So all in all, the odds of making money with swing trading are way higher than the odds of making money with day trading. And that's why I always recommend people to just start with swing trading, because it's easy to make money for most people. There are exceptions, because I know some people that just can't swing trade, but for most people, it's the best way to trade. But you have to analyze yourself and realize, can I sit in a trade for so long without doing anything? Can I handle this? Can I wait a week for a setup to occur? I can. I don't mind. I can still make nice returns each month if I wait for a setup like a week or so. I don't care, again, because I'm patient. But are you patient? That's really what you need to figure out. And even if you're a day trader, you need to have some kind of patience, because you still need to be waiting for that setup to occur. But if you're swing trading, generally speaking, your frequency of trades is going to be a bit lower, and therefore some people might not be able to handle it. So then you can increase frequency or work around it with management and those type of things. So this is a clear example of swing trading. If we go to the daily time frame and we take a look, I just follow the swing of the market. We have an uptrend after we took out 2 equal lows. Then we broke out. So at that point, the bias is bullish. We break down, take out this decently key low, and then we move up. And this is where I entered. So if we go to the H1, you can see I'm just following the swing of the market. And during the swing, so we got the down move, the up move, reaccumulation, then again a new leg up, and that's what I entered on, the new leg up, and then we get a swing and then another leg up. I'm following the swing of the market. I'm not trying to pick a top, pick a bottom. I'm just following the direction that the market tells me that it's likely to go. That's another thing that a lot of people try to do when day trading, is to pick the exact turning point. And yes, it can be done, but it's not necessarily needed to make money in the long run. As you can see, I'm not precise at all. I enter here and look how far the trade went against me. I could even enter at the retest of this level, and then still price went a bit down. I'm not that precise in terms of entry at all. And you don't really need that to make money. You can, if you're swing trading the higher time frames, the H1, the H4, the daily, the weekly. It's more about getting the bias right and then entering into that bias at an area where there's edge. And you don't need to pinpoint the exact turning spot. That's so hard to do. And apparently that's what most people focus on, because day trading just sells. But it's not needed to make money. Let that be very, very clear. If you take one thing away from today's video, it is that you don't need to be picture perfect sniper entry every time to make money in the long run. It can help you in some occasions, but I think most people focus way too much on it, especially when day trading, and they lose the core of the game out of their side. And I've spoken about this before. So that's it, guys. That's swing trading. That's why I think it's the best way of trading. That's why I like it. But you also now know the downside, that generally speaking, you need to get a bit more patient. And it's up to you to figure out, because if you're not patient, then this method or this way of trading might not be it for you. But I do recommend that you still explore swing trading because the odds of making money are just a bit higher than with day trading. So thanks for watching, guys, and I see you in the next video.